This video is for general educational purposes only and should not be considered financial advice. Always do your own research before making investment decisions. When most people begin investing, they ask one simple question: what company should I buy? But experienced investors often ask a different question first. Which sector should I be looking at? Because history has shown that while choosing a good company is important, the environment the company operates in can be just as important. During different periods, entire sectors of the economy have experienced years of strong growth. Technology, mining, energy, healthcare, artificial intelligence. At different times, each has had its moment. In this video, we'll look at why choosing the right sector matters, how money moves between different industries, and why understanding the bigger picture can help you become a better investor. Imagine you own the best surfboard in the world. If there's no wind and no waves, you're probably not going very far. Now imagine you have an average surfboard, but the waves are perfect. Suddenly the conditions are working in your favor. Investing can work in a similar way. Even excellent companies can struggle if their entire industry is facing difficult conditions. At the same time, average companies can sometimes perform well simply because the whole sector is benefiting from powerful economic trends. That doesn't mean every company succeeds, but it does mean the sector itself deserves your attention before you begin comparing individual businesses. Let's look at one famous example. During the late 1990s, investors became excited about the internet. Technology companies attracted enormous amounts of investment. Some businesses became incredibly successful. Others barely had a business model. When the bubble eventually burst, many internet companies disappeared altogether. But one lesson remained. The technology sector changed the world. Investors who recognized the long-term importance of technology had far more opportunities than those focusing on a single company alone. Another example came during the global resource boom. Rapid industrial growth created enormous demand for commodities such as iron ore, copper, coal, and oil. Mining companies, drilling companies, and equipment manufacturers all benefited from increased demand. Some businesses were exceptionally well managed. Others simply happened to operate in the right sector at the right time. When demand eventually slowed, many of those same companies experienced difficult years. The lesson wasn't that resources always outperform. It was that sectors move in cycles. Today, artificial intelligence is one of the biggest investment themes in the world. Many people immediately think about one famous technology company, but artificial intelligence is much bigger than a single business. It has increased demand for semiconductor manufacturers, data centers, electricity generation, cooling systems, networking equipment, cybersecurity, cloud computing, software. The companies making headlines are only one part of a much larger ecosystem. Sometimes the biggest opportunity isn't identifying one winner, it's recognizing the broader trend. Money doesn't stay in one place forever. As economies change, investors often move their money into different sectors. When interest rates are low, investors may become more willing to buy faster growing companies. When interest rates rise, they may prefer businesses with more stable earnings. Changes in commodity prices, government spending, population growth, new technologies, even world events can all influence which sectors attract investment. Understanding these larger forces won't tell you exactly which company will perform best, but they can help explain why certain industries become more attractive than others. Imagine you're standing on the beach. Would you rather search the entire ocean for one fish, or first find the school of fish? Successful investors often think in a similar way. They first try to identify where the strongest economic trends are developing. Only then do they begin comparing individual companies. That doesn't guarantee success, but it helps narrow thousands of investment choices into a much smaller group worth researching. Before investing in any company, ask yourself 6 simple questions. Is this sector growing or shrinking? Why is it growing? What could cause that trend to change? Who are the leading companies? Could I invest through a sector exchange traded fund instead? And finally, am I buying because I understand the long-term trend, or simply because everyone else is talking about it? These questions won't eliminate risk, but they can help you make more informed investment decisions. One lucky investment can happen by chance. Building wealth consistently usually relies on having a repeatable process. Choosing the right sector won't guarantee success, and choosing the wrong sector doesn't mean every investment will fail. But understanding where the economy is heading, where money is flowing, and which industries are benefiting from long-term trends can give you a much stronger starting point when selecting individual companies. Remember, a rising tide lifts most boats. Great investors try to understand the tide before choosing the boat. If you found this video useful, please click the subscribe button. It costs you nothing, but it really helps the channel. Thank you for watching, and I'll see you in the next video.